Hello everyone and welcome to today's major markets update for Friday, April the 29th. I keep putting the wrong date on my slides. And so far, so good. But always be wary in the markets of the curveball. Optimism is literally falling off a cliff. And while we're still falling, we're not dead yet. But please keep in mind the markets always has a lot of trick on their sleeves, up their sleeves. But I think for now it's progressing quite nicely according to the impulse pattern that became our preferred view once we started breaking down below key levels. That is why we track the markets as either a first and a second wave, or an A and a B wave, etc., or a third and a fourth wave. And if the fourth wave doesn't materialize, price goes too low, the fifth wave can't happen, etc. We have no preconceived notions. You might be right 9 out of 10 times. At some point, you'll be utterly wrong, and it will be devastating. So we always track everything objectively. So far, so good. So let's see what we can find in the charts. I'm going to start here with the Dow Jones. Why not? It's the mother of all indexes, the bellwether. And so far on the closing basis, we have a nice impulse lower towards the ideal wave 5 target zone. We bottomed 2 days ago or 3 days ago right here in the ideal wave 3 target zone on the closing basis. And then yesterday we topped right here in the ideal fourth wave target zone, also on a closing basis, and now racing towards this wave 5 of C of 4. That's the question mark, with an ideal downside target on the closing basis at around 32,700, something around there. Can always go lower. So again, just because we have those Fibonacci numbers doesn't mean we always have to adhere to it. That's the proverbial curveball. Moving on to the NASDAQ100. Looks pretty good here. The small numbers since the B wave high, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, count up days as waves, right? So we have down, 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 up, that's 2, down, up, etc. So we need to see at least 13 waves. Why? Because that would then be a 13 wave impulse, because impulses move in 5, 9, 13, 21 if they're subdivided. And then with knowing 13 waves, can always turn into 17, we know we have completed an impulse. So far we've completed 10, so we still need a low, a high, and another low. Okay, so the downside is not done yet, but we're getting tremendously oversold. That is for sure. And if past performance is any guarantee for future results, we should be ready for a bounce soon. Now, I have a question mark here at the low we made on Wednesday, because it is a little short of even equal to the length of wave 1. So this is the length of wave 1, in my humble opinion. This is the length of wave 2, in my humble opinion. And then 3 fell a little bit short. It should go to ideally here. Okay, so we're not even there. So that's a little odd. If this is then 3, 4, as we see for the S&P 500 and the Dow Jones, then wave 5 of 5 cannot go lower than this level here, because 3 cannot be the shortest wave. This would then be the ideal level, which is close to, let's see here, let's get the right thing, at around 12,185. Okay. We go below 12,185, then this is not 3, and then this is not 4, but a smaller third wave and a smaller fourth wave. But based on the wave count for the S&P 500, as here, I think we're racing towards wave 5 low. We have a nice top here for wave 2. We had it labeled as A1, B2, but now we're in an impulse. Yesterday, you can't make it up. We topped exactly at the 76.4% retrace. We had a picture perfect 4 equals wave 2 in length. Let me show you this. It's picture perfect. So this is the length of wave 2. You see that? So then this is the length of wave 4. You see that? Right up to the 76.4. It's fantastic. Absolutely. You can't make this stuff up. That's 2 for 2. And then a 5-1 relationship, of course, targets exactly 4,041. Let's see if we can get there. Sure looks to be the case. Again, can't be certain yet if this is 3 and this is 4 and this is 5, but it sure looks as good as things will ever get. If we get here to about 4,040, then we've done 3 larger waves lower, A, B, C, which means either the correction is complete, that's the preferred view, or it's only the initial 3 waves lower of a more complex correction. Remember, corrections can become tremendously complex in that we get a large A wave lower, then we get a large B wave higher, and with 3 waves lower, it means we have to see 3 waves back up, then this can turn into, so this is of course then the question mark, or is this A? That we have to remain objective, that it will be then the alternative count that I'll be tracking. And then we get a wave B, which will either be a triangle or a flat. Why? After 3 waves lower, expect at the minimum always 3 waves back up. You don't know if this is truly the end of wave 4. I think it is, based on, for example, sentiment and all those good things, which we go over in a minute. Okay, so but this can still be wave A, and then we get a very large wave B, probably all the way back here to the 4600s, if not even more. It can become irregular, to be determined, but we'll keep our eyes open to both options. But even a B wave will of course be a massive long opportunity. If we're going to rally to 5,500, 6,000 versus we're going to rally back to almost the all-time high, there's a lot of upside potential from 4,000 to almost 4,500 versus 5,500. So that means we always trade accordingly, raise your stops. How can you make the difference between trying to target, well, of course, trying to target just a bounce versus a new bull is, of course, using the Elliott wave. We need to see 5 waves up, all those things, corrective pullbacks, break higher, yada, 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 raise your stops, take profits where you have to, that kind of stuff, okay? So here, for example, from the short perspective, this is where you should have, I would say, start unloading your shorts or cover, so to say. This is potentially get stopped out, or you raise your stops and then you try it again, so to say, on this level, right? The target zones are for buying and selling, or you would have bought a little bit of a long and then you of course take chips off the table once you get into the 4th wave target zone, those type of things. This is what the target zones are for. This is going to plan. So far so good. Bottom where we had to, we topped where we had to, declining where we had to. No surprises, zero. Okay, absolute zero. It honestly, this already telegraphed yesterday that Apple and Amazon's earnings would be met with disappointment. Of course, Amazon's earnings were utterly disappointing. Apple's earnings were actually pretty good, but we're in a seller's market, so we sell whatever we have on hand. Still looks good here. Eventually we'll bottom for this wave 4 in the 4,000 target zone, plus or minus 50. Let's look at the futures market. Futures market looks great as well. Look where we bottomed for this wave 5 of C3. Look where we topped for this wave 4. So now that we've already gone below this low, we can also make this a 1, a 2. This is a 3, and this is 4. We look where we topped, right? Exactly at the 76.4%, just like the cash market. And now we're subdividing lower. I think we're in like micro 3 of minute 3 of minor 5. Ideal target 4,022. So we're getting pretty close to a low. Okay, this starts to look really, really good. I like it. This is following ideal Fibonacci pinball, so to say, as Avi Gilbert would say it. And we'll have a look at his work as well, because 2 no more than 1, and it's not not stupid to look at what other people are seeing and see where one would potentially be wrong or be right in one's conviction. So this looks good so far. Picture perfect. Boom, boom, boom. I like it. 5 waves lower for this wave 1, corrective up for this wave 2, right in the ideal target zone, impulse lower. This little thing threw me off a little bit first. Again, can't get everything right, but everything so far is progressing really nice. All right, speaking of Mr. Pinball, what is he looking for? Also a 3, a 4, and a 5 in the whatever target zone we have, 4,042 to potentially as low as 39.30. Okay, so picture perfect with what I'm seeing. From this would be a fantastic buying opportunity. Whatever the news will be, the market will find some news, whatever it's going to be, we should see a massive reaction from there. So hands on the trigger, getting close, hands on the trigger. Honestly, that's what I'm looking for. No curveballs just yet. Everything's progressing nicely. Here's one of the reasons why I think we're going to see this massive rally. individual investor sentiment is the lowest since March 2009. Okay, again, why it's so serious? Let's put a smile on our faces. This is amazing. So many bulls of so many bears, 60%. It is the highest levels seen in almost 2 decades. This is abnormal, and the majority cannot be right on the market all the time. It is not how the market works. The majority is wrong on the markets all the time. They can be right for quite a while, but eventually the market will say enough is enough. And this rubber band has been stretched to the breaking point. We're either going to break and completely collapse, or it's going to snap back. And the Elliott wave count suggests massive snapback. So get ready, almost there, in my humble opinion, not yet. Now here is the money manager exposure. That's the National Association of Active Money Managers. And this week, this was data for yesterday, we're at 46%, which is massive underexposure. The long-term average with data since 2006 should be at around 80%. That's a reasonable exposure of one's portfolio, 21% in cash. Personally, I am more than half in cash in my portfolio, and I'm simply hedging my core positions as well as trading a lot with my highly successful currently trading systems, where I can highly encourage you to sign up for if you haven't done so and you need some help with buying and selling decisions. If the target zones are not yet enough, right? You can Elliott wave this real good, by the way. This is easy peasy trading. It doesn't get any easier. So let's see what levels we're going to get by next Thursday, because the downside's not done just yet. So I think we'll probably see very sold out readings, which often, especially since the bull that started in 2009, means we're going to get close to important lows. Put call ratio is also extremely low, but we have no sign of a reversal yet. Okay, this is data for today. There's no sign of a reversal, so this one also suggests lower prices. Look at this chart, how nice the Elliott waves pop out. Okay, beautiful, very easy to track. How are we doing then with this put call ratio? I have no data yet for today. It's going to take a couple hours before it's updated, but you can see this has slowly been increasing. Yesterday's reading was 0.71. Today's reading would probably be even higher. I hope so. And it shows you that the 5-day simple moving average of the put call ratio is increasing. We need to see these peaks, very high peak readings, to really know, okay, we're getting very close to a low. Getting close, not there yet. Same for this indicator, the NEMO VIX S&P 500. I don't have the NEMO reading for today yet. It's going to take a couple hours before it's updated. But again, we need to see the NEMO go nicely low below the Bollinger Band, then turn back into the Bollinger Band to get a nice buy signal. The same for the VIX and the same for the S&P 500. I want all three aligned. So let's zoom in. What do we have? The VIX closed at 33.40, which is 4 cents above the Bollinger Band. So requirement 1 has been met. The S&P 500 closed at 41.3193, which is about $1 below the Bollinger Band, also met. All I need is the NEMO data, see if that one closes below the Bollinger Band as well. I would be surprised. Then we have the first level completed, in that we need to see the close below the Bollinger Band, then close back inside. We haven't seen it yet other than here. So let's wait and see on Monday what this is going to give. Again, I don't have the data yet until 3-4 in the afternoon, my time. How we're doing on this nasty little indicator. This is the VIX divided by the VXV. The VXV simply looks at volatility longer out versus that of the VIX. And readings above 1 are consistently aligned with lows. I do want to see actually a much higher reading, okay? Something in the 1.1s, 1.2s would be fantastic. That's a real washout reading, not there yet. How are we doing on the PMO buy all, sell all indicator? This one has been bottoming out for quite a while in the ideal buy zone, okay? Now, if one were inclined to use this one, you could say, I'm going to buy every time a little trench when this one is still bottoming out, and yes, you're averaging down and all that bad stuff, but please be advised that this bottoming out can last a long time, as we saw during the COVID crash. Okay, it can happen a long time, as we saw here in September last year, as we see here in December. Okay, it can take a while, and again, this indicator is not a guarantee, and neither is it always right. No indicator is, no method is. But this one also suggests, again, we are closer to a low than to a top. Yes, the low is not in yet. Elliott wave count suggests a little bit lower. Again, S&P 500 around 4,000. I would say the NASDAQ to about 1,200s. That would be perfect. And for the Dow Jones, I am again looking into the mid to low 3,200s. So everything is aligning for a nice setup from where we should expect a massive rally. How we're doing on the new lows. Interestingly, the new lows dropped today quite hard. All right, they peaked yesterday. Let's have a look. They peaked yesterday at 523. In fact, they peaked even on Wednesday, 591. Okay, this is the new lows for the NYSE, 591. New lows for the NASDAQ, 862. A little bit lower yesterday, even lower today. So that's interesting. A lot less stocks are making new lows while the indexes are going lower. So we start to see some divergence going on. This is interesting. Seems like big tech is selling primarily, but the readings are still way too high to suggest that also here a bottom is in place. We need to see it drop below 50, but this is an encouraging sign. Lower prices. This probably still needs to update for quite a while, but I would be surprised to see this even increase considering the drop we're seeing today. This is interesting. Okay, so under the hood, things are improving. Don't know yet what's improving, but something is improving under the hood. So that's a really good sign. So overall, I think we're starting to move towards the bottom. Things are really washed out sentiment-wise. Price is not there yet. The target zones are on the chart. Again, the semiconductors and the IWM appear to be subdividing slightly lower. I'm going to detail them a little bit better in the next update, but I really wanted to bring the most important ones to our attention. The Dow Jones, the NASDAQ100, and the NASDAQ, the S&P 500, the futures market. So everything is so far aligning nicely. And now we're going to wait for this proverbial curveball, okay? All a fifth wave needs to do is make a low below the third wave. So for all I care, it costs only 1 cent below it, though the internal wave count suggests we need to see a few more scribbles lower on that chart. Sentiment completely washed out, market allocation completely washed out. Everybody is in the puts and not the calls. Not yet, don't have data for today. Want to see some more triggers happening on the NEMO, the VIX, and the S&P 500. Want to see some higher readings for some better alignment of bottom calls, but interestingly, again, less lows, while price less lows, it's lower lows for stocks, 52-week lows, as price moves lower. So overall, I think we're racing towards that very important bottom, from where we should expect at least a 3-wave rally, which means after 3 waves lower, we can only experience, if this becomes a much larger correction than originally anticipated. It's already larger than I originally anticipated. So I'm not so sure we're going to continue this correction in that sense. It's either going to be a triangle or a flat. If it's a flat, we can easily reach new all-time highs. If it becomes a regular B wave, a triangle can easily start to get very close to the all-time highs as well, but we take it one step at a time. The first step is that it looks like, based on the Elliott wave count that's been tracking the market really nicely, we're getting closer to a bottom. Not just yet, maybe a couple more days. First week of May wouldn't surprise me. Some insider information I got, so to say, suggests that might be the case. So I wouldn't be surprised given that we're getting so close to this downside target. And then again, if you are having troubles with trading, want some better trading advice, all those things, here is, for example, my alert from today. All the inverse ETFs were stopped out yesterday. It's fine. We don't have to trade everything. That's the short term. The intermediate term already went inverse ETFs last week or 2 weeks ago, cashing in those ones as well. Long-term signals are being cashed in. All of these are all winning trades. Yes, there will be losses along the way. I'll update all the trades for this month, and I think you'll see a massively outperforming trading system for the short term, intermediate term, and long term compared to the indexes. So it's a very nice, easy way to maybe make some additional money, and that's all what's about. You'll get the update about 15 to 10 minutes before the close, which is ample time to place any trades. You just quickly read what you need to do. It says sell, buy, hold, whatever it is, raise stops, easy peasy, 10 minutes, you can do it. I do it myself, and I'm highly happy with it, of course. If I were unhappy with it, I would change it. Anyway, that's all I have for today. So again, I think so far so good. Everything is tracking real nice. And let's see if we can get a curveball. But I think that we should be looking for slightly lower prices to complete this C wave of wave 4. And if this wave 4 wants to get even bigger, so be it. But once we get the C wave completed, it's time to start to look for higher prices. I think it's coming. Sentiment is way too washed out, way too extreme to continue to allow for lower and lower prices. All right, have a great weekend. Take care, trade safe, and I'll see you all on Monday.